Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives right after they put out important news. With us today, we're happy to have him back for the second time. First interview was a smash success. Seti Coscarella, he's CEO at TAAT Lifestyle Wellness, trades on the stock symbol TAAT, TAAT on the CSE, and for our friends in the US, TOBAF. For those of you new to the story, there's going to be a lot of you because TAAT has been a bit of a market darling since its launch of its products back in December. To understand the value proposition of TAAT and the growth prospects, okay? Because we don't run into companies like this very often, and neither do you in the small cap world. You first have to understand some of the recent massive trends in the consumer packaged goods space, okay? That's a CPG space. What do I mean by that? Non-alcoholic beer, right? An alternative, perfect experience to beer, but alternative has grown to $18 billion market. The plant-based meat market, we know Beyond Meat, but there are other companies in that space and as well, has now grown to an estimated value of about $4.5 billion, grown to $8.5 billion. What they have in common is they're providing the consumers the original products, alcoholic drinks, meat, right, with the exact same experience, taste, smell, even the movement and all that, without the negative parts of the original products. So here's TAAT. Tobacco is used by 1.3 billion people worldwide. The market exceeds $930 billion from the last research I saw. Many of users of cigarettes aspire to leave nicotine behind. In the US, there are 34 million adults alone. So what's TAAT done? Under the administration of what I call an all-star team from the tobacco industry, they've developed a nicotine-free, tobacco-free smoking experience known as TAAT. That's a trademark that's already been launched in the US. This isn't an idea. This isn't R&D. It's already been launched. And what it does is it mimics those experiences of a cigarette without the nicotine, without the tobacco, but it tastes and smells just like it. It's tearing up the market at this early stage. Let's talk about it. Seti, welcome to the show, man.
Thanks, George. You're hired.
Good.
I'm done. I mean, maybe I'll ask you questions now.
There's the audition. That's a wrap. Let's go get some drinks.
Yeah.
Hey, it's easy because you guys are knocking out of the park. And we haven't seen something like this in the small cap space, all right, where you can move into a massive consumer packaged goods category. How big of a problem are you? I don't want to say you're solving it, but how big of a problem are you addressing?
I mean, it's a huge problem, right? I mean, if you think about how big the population of smokers actually is globally, you're looking at about 1.5 billion almost people. So, I mean, that's a significant percentage of the population, and the industry alone is worth, I think it's 960 billion US. So it's huge. I mean, it's practically $1 trillion industry per year. And I mean, you'd be hard pressed to find smokers that have just sort of resigned themselves to say, screw it, I'm going to smoke. I mean, they're all in some various stage of looking for alternatives or quitting or something, right? And, you know, given my time at Philip Morris, when I was working with a lot of smokers, because we were trying to commercialize this product called IQOS. And, you know, for the vast majority of smokers that I worked with, and I worked with thousands of them, it's always the same thing. Like, oh, you know, I'm trying to vape, oh, I'm trying to quit, or the patch or the gum or this and that. I mean, there's all these sorts of things, which tells me that there is a captive audience, right? It's not like you have smokers that are completely satisfied and you're trying to inject something into them in the hopes that they're going to buy it. You have a pool of 1.5 billion people who are actively looking for another alternative, but they haven't found it yet. And I think we have an alternative that is actually viable that will solve a problem for them, because there isn't a smoker alive that wants to consider themselves an addict, right? But the fact of the matter is you're addicted to nicotine. So if we can give you something that you can still smoke, that'll give you the same experience as a cigarette, same taste profile as a cigarette. In fact, I think it tastes better than a cigarette. And we can make it non-addictive and give it to you at a price point that's cheaper than a pack of cigarettes. You're telling me you're not going to, at the very least, give it a try? And given the size of the industry, I mean, you take a look at the size of the market in the US. I mean, in the US alone, it's about 100 billion. So I mean, you don't need every smoker to love it. you need, I think we talked about this the last time. I mean, I could have 1 out of 400 smokers like it, and that's still $250 million a year in sales, just in the US. And the US is only 3.5% of the world's smokers.
Yeah,
So
the numbers are
it doesn't matter how
mind-boggling.
you cut it, George. I mean, seriously, like, it's one of those industries that if you have the wherewithal and you can show up with a product that even a modicum of the market likes, and I think we have a product that a good number of the market would like, but even if you had something that was marginally liked, you're still going to do well.
I would have assumed that if we were talking November before you guys launched, you'd have the optimism and say, George, you know what? I think we're on it. We got the potential to be the next CPG revolution. But you've launched. How have the repeat orders from over 60% of your retail establishments, because your customers are George the smoker, the user, but your clients, right? Those repeat orders, how much more confidence does that give you and the TAAT team that you guys are potentially moving closer to being the next big CPG revolution?
Well, listen, I think whenever you launch a new product, I mean, you might like it, but you have a bit of a bias because you're on the team that made it.
Of course.
The best thing that can happen is when you actually put it out in market and you have people that are, I guess, don't have that bias, right? It's just raw, whether you like it or not. And when you put it out in market that way, and you get actual smokers that are buying it, trying it, liking it, and then going out and buying it again, I mean, that gives us a tremendous amount of confidence in the product that we have. I think the price point, the execution strategy, how we're sort of rolling it out. So, I mean, for us, I think that initial feedback gave us what we needed to really start ramping up production and, signing on guys like Crossmark.
Yeah, and
We announced that earlier in February. Now, Crossmark is a tremendous partner for us. I mean, they're the same sales agency that commercialized for Juul. So they've got access to a significant percentage of the convenience stores in the United States. They work with a lot of the chains, if not all of them. They represent, I mean, if you even go to their website, I mean, they represent companies like Mars, Kraft, P&G, Unilever, Ferrero. Like, they work with brands, and they typically only like to work with brands, unless they see an opportunity on something new that they think they can help blow out of the water. Otherwise, there's more companies that approach them than business they'll do in a year. So, when they learned about us and we kind of went through that process and explained to them what it is that we wanted to do and the value proposition we had to the consumer, I mean, they were probably equally more excited about the opportunity than we were. And they said, listen, I think that we can knock this out of the park for you. So given the fact that they've done it before, I mean, they did, tremendous business with Juul. And I think it was, they put
Juul on the map.
Well, for sure, especially in the US. I mean, Juul, again, I've used this one before. I mean, Juul launched in 2015. Now, they weren't the first vape in the market. There were a lot of vapes before them. I think they just figured out how to package it and market it a little bit better. By 2018, so 3 years later, Altria had made an investment of $12.5 billion for 30%. So they valued it at $40 billion. It's not bad for 3 years. And just in case that's a lucky one, there's another company called RLX. I think we spoke about it last time. So they're like a similar product to Juul out of China called Relax. They started 2017. They IPO'd on the NYSE about 3 weeks ago, and they've been holding a value of $40 billion. They do 300 million in sales. So again, like, you start thinking about the size of the US market. And again, you got $100 billion market. 1 out of 400 smokers is about $250 million. So really the question you ask yourself is, do you think the product's good enough that 1 out of 400 smokers will like it? Because, and again, you're not going to get that overnight, but that really becomes the goal. Can you find 200,000 or 300,000 smokers in a population of 40 million smokers in the US that will like and continue to buy TAAT? That's really what the math works out to be.
Well, when you get 60% of your customers renewing, and they're only renewing because George and Mary and Bob are buying, then I think that tells you that tells you a lot.
And
What
that's what I mean. You know, you start looking at the numbers that way. And again, it's like these little things that you start to add up and say, all right, you know what? I do think we have something here. Now we can start going a lot harder, a lot faster.
so
And
what
that's
is
why we wanted to get e-commerce out this week, because we thought that it was the right time to launch it. And I think that there's a pent up demand in the market now, because even from the advertising that we were circulating in Ohio through our digital marketing team, AdFuel, we started to see people in Ohio sharing the ads with other people in the US. So even though we geofenced or just were running ads in Ohio, we started seeing people from all over the US pop up by hitting the ad or something that was forwarded to them through the analytics. I'm like, okay, people are starting to share it, which is interesting. So now that you're starting to build a little bit of a bit of that awareness, you want to be able to start offering that to the broader market. E-commerce, I think, is a tremendous tool that we can leverage while we start building out and expanding on the brick and mortar side.
and this interview is not scripted, right? There's a reason I'm asking you that. Was this interview scripted or just basically, hey, we know what we're going to talk about? Because you just hit on something I wanted to ask you about, which is the virality. Because I was thinking to myself, hey, if I'm a smoker in Ohio and I've tried TAAT and I like it, and the price point, which I want to talk to you about because you have an advantage there that other CPG companies have never had, but we'll talk about that. But the first thing I started thinking was, George from Ohio must be sharing this on Facebook, on Instagram, telling his buddy and his cousin in Florida, hey, by the way, you know how you and I smoke, and we always said it'd be great to find, you got to check out this TAAT stuff, right? So are you guys finding that the virality is happening? I'm glad you said that because I had no idea you're going to bring it up, but I was going to ask you.
Yeah, no, it's not scripted. It was all just a natural conversation.
Yeah.
But yeah, we're starting to see that, right? I mean, and it's very similar to how Juul, the trajectory that Juul hit. Like I remember when Juul launched formally in Canada, there was nothing to launch. Everybody in Canada knew what Juul was. Half of the stores already had it because they were just getting it from other people that were coming down from the States, right? So if you do a good job on communicating the value proposition and you start creating that awareness, and through the consumers that are buying it, they like it and they start sharing it with their friends, I think you absolutely get that. And it's a very authentic virality, as you called it. It's not something that's kind of engineered in any way, and that's the best kind. Yeah. When people like it and they go out of their way to share it. And then when they do that, I think a lot of people start paying attention. It's like you can see an ad for something online, and we do a pretty good job with that. But
Great
on the flip
branding.
side,
Fantastic branding.
If you know your best friend says, "Hey George, go to Canadian Tire. You really got to buy this, I don't know, gazebo or something," you're going to go. Right? Versus, hey, I saw an ad for a gazebo, or I saw an ad for a barbecue or something like that. So when you kind of get that word of mouth starting to spread from people in your trusted network, I think the brand has an accelerated path to sort of mass awareness.
So let's talk about that. There are two big distribution points that are new from the last time we spoke. Since we're talking about e-commerce right now, let's talk about that. Tomorrow, Wednesday, February 17th, you're launching the online, obviously the e-commerce store, and you're going to be selling across 39 US states, right, Sadie? That's a massive advantage because you can't sell traditional tobacco across state lines, can you? If I'm not mistaken, correct me if I'm wrong.
Yeah, because I mean the tax stamps that each state would require. Right. So I mean, crossing from a commercial standpoint becomes very difficult. But I think we've been able to obviously solve that problem. We don't have the tax stamps issue on our product, so we can ship it to those states. And I think it also helps from a future brick and mortar expansion. So as you get the product in, e-commerce is a great way to get your early adopters or people that are really intrigued about the brand or want to give it a shot, so they can get it basically ahead of a lot of other people, and they'll start socializing it amongst their friends, which I think is also great. And as we start to see certain states that, let's call it over-index, those become, you know, either higher up the list or lower down the list in terms of the next states you want to go to. So you use the data and the knowledge you get from the e-commerce to help refine the brick and mortar strategy, because those two things need to work in tandem. You're not going to catch every smoker through e-commerce.
Nope.
You might not catch every smoker through brick and mortar. So you need to figure out a way on how to get these two things to work symbiotically. Otherwise, oftentimes what ends up happening with some of these CPG companies is that the e-commerce and the brick and mortar compete. They don't create more value. They basically irritate people on the other side.
One's trying to cannibalize the other.
Exactly. And I think we've figured out a way on how that won't happen.
Well, it makes sense, right? If I'm Crossmark, I would actually welcome the e-commerce store, and I don't want to speak for Crossmark, but I welcome it because you're going to say, hey, Crossmark, we launched in 39 states. Here they are ranked in terms of orders from 1 to 39. Here's the data. What do you want to do? It just makes my life that much easier to go after the bigger markets and faster and more efficiently.
Exactly. And again, sometimes you just have to use these little rules of thumb. I mean, the easiest way to sell something is when people are asking for it. Right? At that point, you're just fulfilling orders. If you start seeding the market with the product, people start using it and they like it. They want to go to their store and buying it. As they go into these stores and ask for it, if they don't have it, the more people start asking for it, the more stores are going to want to carry it. And then it just gets you more, and it snowballs in the right direction. And I think that's really what we're trying to engineer through this rollout in the US. And I think that so far we've been doing a pretty good job of it. And now that we've got sort of the right partners in place to give us that scale, because again, like Crossmark already services over 100,000 convenience stores in the US. They already work with all of the wholesalers and distributors. They already work with all of the chain accounts. So to get an additional product in front of all those buyers is really not that difficult because the relationships are pre-existing. And they have the people that are going into the individual convenience stores. They have thousands of them across the US. They're going into these individual convenience stores on a weekly basis, making sure that the product is stocked, that it's merchandised properly, that the retailers know what they're supposed to say, that the price is right, that it's got the right visibility for consumers. So, I mean, they help you do all of that. And I mean, it's such a monumental partnership for us. And we're very excited to really start getting that ball rolling, because
I think it's very important for people at home to understand that Seti said it earlier. The brands that Crossmark represents are some of the best known consumer brands, and we all recognize the names that Seti racked off a few minutes ago. That means that they have a reputation to protect and to maintain.
Oh yeah. So that's why they don't take anybody that knocks on the door.
They're not just, they must have 1,000 Georges knocking on the door saying, hey, can you carry these new bottles and put them in your store?
Yeah, and they won't do it, right? Because it doesn't really fit the brand. I mean, at the end of the day, they got a massive organization. So they're going to be able to cherry pick the projects that are going to make the most sense for them. And they say no way more often than they say yes.
For sure, right? I bet you they only take on a handful of new brands every year at most.
Exactly, because I mean, again, like, there's only so much you can do with a store. Like, you're not going to go in with this, dictionary of products saying, "Hey, I got 1,000 products. Which one do you want?" They're going to cherry pick a handful of them, and they're going to put their effort behind making sure that those ones that they have succeed. And that's also across the board. Want to work with them. So it's not just an exercise in, hey, you're one of 1,000 products that we carry. No, they carry all the brands, or a good chunk of brands that you would know, and we now get to be a part of that. So when they're going in and putting in the effort, this becomes a priority project for them, because this is one that's getting seeded into the market. And there's a difference between seeding a product in market and maintaining a product in market. Right?
Yeah, listen, you guys have the all-star team that knows this, as opposed to George and a couple of guys getting together saying, hey, I think we can sell this product. You guys understand that.
Exactly. So, I mean, when they're going in and calling on these stores, I think they're going to spend, a good chunk of the time. Here's TAAT. This is what it does. Here's how you position it. Here's the price. This is the value proposition of the consumer. For a lot of the other products that they carry, there's not a lot of that education that needs to happen, because people know what it is. And that's really the point that you want to get to. Even when Juul launched, in the beginning, there was probably a lot of explanation to consumers that had to happen to explain to them what this is, how it works, what you do. Okay, I got this device, I got to charge it on my phone, I got to do all of these things. And, you know, um, and then you start getting consumer acceptance. I think one of the great things with us is I don't have to teach a smoker how to smoke a cigarette, right?
And that's the
Um,
advantage, right? You're mimicking the exact same experience. That's why vaping, I don't want to say has failed, but that's why vaping didn't catch the way people thought it was going to catch, or at least manufacturers thought it was going to catch. Because at the end of the day, you're forcing someone to do something totally different.
it's
Whereas if I'm
different
a
taste.
cigarette smoker, I want
Yeah.
the exact same experience. I don't want to just like meat. If I'm going to eat a Beyond Meat hamburger, I just want to pick up a hamburger in a bun, eat it, taste the same, smell the same. I don't want to go through a complete different experience where I'm sucking it through a straw or something.
100, you hit the nail on the head, right? I mean, it's the exact same thing, right? I mean, Beyond Meat did a great job of creating a substitute that was almost identical to meat, so that for somebody that wanted to try it, it would
It's easy.
actually be better than they thought, because they're probably thinking about, oh, this is going to taste like one of those veggie burgers, a little like sawdust. And then you try it and you're like, man, this actually tastes like a burger. And those are the reactions that you want, because now all of a sudden it becomes top of mind when you see it. You know what? I tried it. I liked it. I think I'd buy that again.
I'm in.
I'm in. And it's the same kind of thing here. You want to be able to provide a smoker with an experience that is better than they would have thought. And I think that we're there. I think that's exactly what this is.
I mean, right down to the pack. You're opening a pack, you're taking, nothing changes.
Yeah.
That's what's so powerful about your product. Devil's advocate.
Hmm.
Things going great. So you've got the attention of Crossmark. They brought you in. They're going to be deploying their force slowly, but they're going to be deploying a force. So you got that. E-commerce launching tomorrow. If everything goes well, devil's advocate, how do you guys look on the production capacity side of things? How do you make sure that production capacity can meet potentially explosive demand, or at least faster demand than you expect?
Well, listen, I mean, we've already started ramping up our production now. So we're producing at a clip that is way faster than we were even a month ago. And one of the things that we're very close to doing is getting a much larger facility for manufacture in Las Vegas, and that will increase production even more so. So again, I always like to plan it so that our best case scenario is not our worst case outcome. You don't want to hit the ball out of the park only to realize you don't know how to run the bases.
I love that, man. I love these. That's what tells me is you're a seasoned veteran, right, at sales and marketing on a mass scale, because you have those analogies.
Yeah. So, we try to build it in lockstep. I mean, the other thing, again, to kind of use the baseball analogy, the other thing you don't want to do is the field of dreams approach, where you build out all of this capacity in the hopes that somebody shows up to buy it. So, because that's not going to work either. So sometimes it's about finding that balance in the beginning, making sure that you got some product market fit, that when you put the product in market, people are going to like it, they're going to want to buy it. And then once you get that confirmation, which is what we've been doing in Ohio the last, let's call it 6 weeks, now it gives us a lot more confidence. All right, you know what? We can start rolling this out a lot faster now. Let's get the production scaled up. You can make the necessary investments, and you're off to the races. So now you just start basically picking off all these things that you got to do, and you do them.
Does it come to a point where you have to co-locate? So you got Vegas now, but at some point you have to go Eastern Seaboard, just as you don't want to be transporting stuff across the country forever and increase your costs. So you think you guys get to that point at some point in the near future?
Yeah. I think, look, as we start to grow, those are the things that you start to look at, right? In the beginning, it really is an exercise in trying to drive sales. Okay. You want to build a brand, you want to capture share, you want to drive sales. As you start doing that, then you get to, how do we drive more efficiencies out of these sales? But in the beginning, when you start getting the wind at your back, like I think we are, you want to run like the wind and make sure that you can get the product in as many smokers' hands as possible. And that's exactly what we're trying to do now, right? It'll be profitable. As you start to really expand, then there's ways that you can drive more efficiencies, more profitability. But again, like I've said this from the beginning, this is a top line story. This is a revenue growth story. And I think that we've got the right team in place to start capturing share. And to make it more efficient and more profitable is always a fun exercise. But let's make sure we have enough beans to count before we start worrying about how many beans we're counting.
There are going to be a lot of new people watching this because when we spoke last time, I think the stock was sitting at or just under $3, right around there. Today, it's after 4 o'clock. Congratulations, you've hit another new 52-week high. 592 is your new 52-week high, closing high. Let people know about your team. And this is important because a lot of guys, George Cum would say, oh, I got a great team. I got Bob, my brother-in-law, John, and my sister, Mary, and we're really hard workers. Okay, great. But you guys are what I call almost an all-star team that comes right out of the industry. And this is important because you're not you're not selling widgets where you're just flying by the seat of your pants and trying to create a new market. You're an established industry that if you don't follow the distribution rules, the production rules, marketing, all these things, if you don't fit into the existing infrastructure, which is a great that it's there, but B, if you don't follow the rules, you're going to get thrown out. Tell us about the team that knows its way around this industry and the guys you've got. You get the team you've got there.
Sure. So, I mean, in Vegas, the guy that's heading it up there, this guy founded the company. His name's Joe Deegan. Now, Joe's been in the flavoring space for many years. He actually created the first hemp cigarette back in 2018 called Wild Hemp, which was recently sold to a company called Turning Point Brands, same company that distributes Zigzag paper. So he created the first hemp cigarette, and now he founded this company. So he's heading up all of the production, the flavoring, product development, all of these things in the States, and he's doing honestly a tremendous job of getting that manufacturing going. And on the product development side, I think he's really created a tremendous product, him and his team down there. And then in Canada, I've got one of my former colleagues, Tim Corkum. He's heading up all of the sales that we've got. Now, Tim's been at Philip Morris for 20 some odd years. He's run various markets. He's launched dozens of cigarette brands. He knows exactly how to get a product in market, work with the distributors, get the right terms, all of the things that you're going to have to go through. Like you're not going to pull the wool over his eyes kind of thing. And, the easiest way to get the product through into the market is to leverage the existing infrastructure, of which it exists. So that's exactly the strategy that we're going to do. So really, you just kind of take it as a new product that would be launched in a very similar fashion if you were in Philip Morris or British American Tobacco or Japan Tobacco. We're just following, the same sort of commercialization plan that CPG companies would normally do. You'd start in a smaller area first. You'd start learning from how the product performs in market. Based on those learnings, you start to expand, and there you go. And you start getting it into more and more stores. And one of the key things is getting the right partners on board that understand the space and can help leverage a lot of efficiencies. And that, again, when I talk about companies like Crossmark, that's exactly what that does, because they're already plugged into the distribution infrastructure and convenience store infrastructure in the US. So to be able to plug in alongside with them can allow you to access those points of sale a lot more efficiently and a lot faster.
And let's not forget your experience, right? Because don't sell yourself short that you're the head honcho. Make sure people at home know, your background.
Sure. So my background, I started in the capital markets, did some private equity. Then I started my own company in the event space, which I sold. And then I was working at Philip Morris for a number of years. So at Philip Morris, I worked on commercializing their reduced risk products in Canada. So what it really taught me there was just working individually with thousands of smokers and figuring out what the appropriate strategies are, how you would commercialize a product like this. How would you position an alternative in a way that smokers would actually want to give it a shot? And I think, leveraging some of that experience on this product has been tremendously valuable. And I guess you could probably take a look at the share price and see from there. I mean, I started beginning of August.
70 cents.
Here's 70 cents or so. So I think we've come a pretty decent way in the last 6-7 months.
Yeah, to say it humbly, but I think it's important for everyone to know at home that it's totally one thing to have a new upstart, great product company. There's nothing wrong with that at all. that so many companies are made that way. But if you can add on the fact that just the experience of studying and the two guys he talked about, plus some advisors that also come from the tobacco industry.
Oh gosh, yeah. I mean, we've got a
You have the
couple of
makings of
advisors.
a winner.
Yeah, I mean, we've got advisors that have been executives and board of directors members for publicly traded tobacco companies. So I mean, they understand the ins and outs of this space, and they help provide guidance in terms of, we'll run a lot of commercialization ideas by them and say, okay, we want to go this way, we want to do this, or we want to do that. And based on their, many years of experience, just helps guide us in the right direction. So look, I think we've got a hell of a team in place, and I really don't see why this product won't work.
Yeah, it certainly looks like that, SETI. We're not going to put the cart before the horse, but between
No,
the
no, I
Ohio
mean,
launch, the renew, the reorders that are coming in at a rate that I'm going to quote Tim, Tim Corcoran, we talked about it, said, of all the tobacco category products I've worked with, TAAT is an outlier in terms of the level of demand it has had in its early stages. I've launched dozens of new tobacco brands across Canada and the Caribbean. And while many of the new products were reordered by retailers in the first several weeks, none of them were reordered by anywhere near 60% of stores that initially carried them. I mean, that says a lot coming from a guy. That's not coming from George. That's coming from Tim Corcoran, who is a former commercialization executive for Philip Morris International.
100%. So again, cigarettes are launched every year, but there's not really anything terribly distinct about them other than maybe some pricing issues, right? I think what we have is a very compelling value proposition for consumers, which is why you're starting to see that traction quickly and early. We've got a product that will taste like a tobacco-based cigarette. We've got a product that isn't addictive, okay? So we can give that to smokers. If you want to switch to this product, it's not an addictive substance like nicotine. And I can give it to you at a price point that's going to be cheaper than any cigarette you could buy. So
and that's because of the taxes, right? So to make sure people know that cigarettes carry a very heavy tax burden with them.
yeah, like outside of the tax, we'll make a similar margin to what
Right.
Philip Morris or Altria will make selling cigarettes at $7 or $8 a pack in the US. And we're selling it, at least in Ohio right now, $3.99 a pack.
Yeah, I want people to realize you were cheaper, not because you're undercutting and playing the commodity business. You just don't have that $3-4 a pack tax that tobacco companies have to
exactly.
add
We can
on
pass those savings on to the consumer.
Yeah.
I think the consumer will appreciate. So it's not like we're eating into our margins to do so. And again, it just forms a stronger and stronger value proposition for the consumer, which is why I think as we start getting broader distribution into more and more stores with marketing that backfills it and e-commerce, I can't see why a smoker wouldn't at least give it a shot. And then again, it goes back to the beginning of the discussion. It's not like I need all of them to like it. I could have 399 out of 400 not like it, and you're still doing great.
Well, I know. Can I order these in Canada, by the way? I don't smoke, but I have a ton of friends, Greeks and Italians growing up who are smokers, and I would love to do nothing better than to give each of them a pack. I don't know. Can I get it in Canada, or is it still early?
No, I mean, we haven't launched in Canada yet. In Canada, the product, because it contains hemp, would also be governed under the Cannabis Act. So that's one of the things that we're exploring in terms of how to appropriately get the product marketed and sold in Canada. But there are different regulations in Canada, which are not the same as in the US. So in the US, I can sell this in convenience stores, Circle K, 7-Elevens, your mom and pop convenience stores. It can sit on those shelves legally. In Canada, it would have to be sold through the licensed retailers.
Right. Got it.
So you wouldn't be able to have it, at least currently, you wouldn't be able to have it in the same convenience channel. So, given the size of the opportunity, we said, all right, well, I think the US is enormous.
Of course.
It's a easier distribution point because you're putting it in the same channels that a smoker would go to buy a pack of cigarettes, and not trying to get the smoker to go to somewhere else where they wouldn't normally buy a pack of cigarettes to buy it. So I think there's a lot of benefits.
A lot of sense.
Yeah, like we're trying to understand the consumer journey in a way that gives our consumers the easiest path to the product.
Which is the same path, they've always taken. So you're not even
100%.
changing the path. All right. That's
No,
like
I
from
mean,
walking into the convenience store and saying, give me a pack of smokes, to opening it up just like you would, to lighting up, smoke it the way it, disposing, everything is exactly the same, except for there's no nicotine in there and no tobacco in there at the end of the day. So,
yeah,
buddy, you've got a winning company and we could talk for another hour. Trust me, I know that.
I'm sure we'll talk again.
Yeah, we're going to talk a lot more. Congratulations on Crossmark. And you haven't officially launched their e-commerce. That's tomorrow, but I'm going to say
Tomorrow morning.
congratulations in advance.
Thank you.
And
Thank
best
you.
success with that. And I think we're going to be checking in with you pretty soon to see how that's going. God knows I'm going to send out that link to all my American friends.
Please do.
Hey, guys, check this out. You know,
yeah. Try TAAT.com.
A gift from me. Try TAAT, right? Try TAAT.com, correct?
That's right.
Thanks for joining us, Seti.
Thank you, George.
For everybody at home, you've been watching, or if you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform, to Seti Coscarella. He's CEO of TAAT Lifestyle and Wellness. The company trades on the CSC under the stock symbol TAAT, TAAT. And for our friends in the US, TOBAF. And for our friends in Europe, 2TP2 on Frankfurt. You've heard what he's had to say. You've watched what Seti had to say. You've seen a lot of the graphics we've been putting up during this interview. If you're new, you got to do your due diligence. If you're an existing, you just got to wait and watch what this company's going to do. But for those of you doing your due diligence, get over to Agoracom. Take a look at the information we've put up there. Take a look at the last interview we did with Seti as well. And by all means, make sure you get over to the company's website as well. The branding is amazing. The information is amazing. You'll be impressed, because I don't want you to tell us a year from now that we didn't tell you so, because we told you. Do your due diligence. Have a great day. See you next time. All right.